The crypto market is feeling extreme fear at the moment, as you can see right here. And of course, that is usually a sign for a reversal. If everyone is fearful, that is usually, as we will see later in this video, the time when the big players are buying. Hey everyone, it's the Patient Hodler coming at you with a very quick, very short crypto market update. If you enjoy these updates, then smash up the like button right now for me here and let's jump right into it. So Bitcoin hovering around the same level as before. In fact, almost at 60,000, 59,777 here. And the market is at extreme fear. This is absolutely insane because this is just under the levels of the previous all-time highs of the last bull market. And also the market for the altcoins is feeling a little bit more green, a little bit more bullish than this morning. And there is a reason for it, and that is the plebs, the retail, so to say, they feel extreme fear, but the big boys, they're packing up their bags, and then after a while you can feel it in the market. So let's look at this here quickly. So you see Marathon, one of the biggest Bitcoin mining companies that have enormous amounts of mining rigs, they actually are going to raise 250 million to buy more Bitcoin. Why do they do that? Because the price is actually under the production price for Bitcoin. Obviously, they will not shut down the mining rigs, but it is a good time to also just buy some Bitcoin and then sell it off later. So they are raising $250 million to buy more Bitcoin. That is absolutely nuts. And also, the financial advisors of Morgan Stanley, they have been unleashed now. So we basically have 15,000 financial advisors pitching Bitcoin to Morgan Stanley clients, and those altogether, they're managing about 5.7 trillion in client assets. So if only a small percentage of these assets in the future flow into Bitcoin, that obviously will make a difference. And we have seen this morning already that at the moment in Bitcoin ETFs, for example, if we look at BlackRock, there are only 20 billion or so, 21 billion of assets through BlackRock in Bitcoin. So the upside is extremely large for these asset managers. And another thing that is going to all-time highs, and that usually goes with the price, as we can see here, is Bitcoin Network's hash rate. So that just hit a fresh record high, hitting 627 exahash, recovering from an 8.5% drawdown. So we see the big hash rate drawdown here in red. We see the actual true hash rate going with the price, and now we have a decoupling here. So price is actually in black, dropping, while the hash rate is rising massively after we saw some sort of minor capitulation during the last weeks. And that can only mean one thing. In the near future, probably the price gets magnetized towards the direction of the hash rate, meaning that we're probably going to see some bullish price action in the near future. And keep in mind, this week is going to be massive. Everyone who watched Crypto Morning Coffee this morning already knows it. But just to see that from tomorrow on, we will have important earnings that give insights into the condition of the US economy, such as Home Depot earnings that are happening on Tuesday, as well as PPI inflation. Then the super important, probably the most important CPI inflation reading on Wednesday. Then also Cisco earnings, Walmart earnings that give another glimpse into the condition of the US economy. And jobless claims, as well as retail sales. So the week is packed with a lot of economical data that will influence this guy here, Jerome Powell, potentially to decide, together with his Fed members, to cut rates for the US. So this could be bullish, although maybe not as bullish, because look at that, just a reminder to what happens to the stocks when the Fed pivots and lowers rates. Now, I think that person got it backwards, but it's still interesting, right? So we see here 1969 Fed pivots, market meltdown 36%, then here in 73 48%, 81 27% market meltdown, in 2000 dot-com bubble, Fed pivots, cuts rates, 51% drawdown, 2007 Fed pivots, it's 58% meltdown, 2019 Fed pivots, 35% meltdown. Now I think where does this person get it a little bit backwards? I think the statement is inverted here. So the crisis already hits. Like we already saw that the Bank of Japan made a small move and everyone in the world freaked out. So the world is already ready for a big plunge, and we already saw the first plunge. This crash can continue, and it can potentially for a couple of weeks, maybe a month or two, rip Bitcoin down with it also. But overall, like the Fed pivot that leads to these big drawdowns here in the market, it usually comes as a consequence of the meltdown or of the bad signs in the economy that then lead to the sell-off. And not vice versa. It's not like that, oh, everything's great, no signs of any trouble in the economy, but hey, let's pivot, let's cut some rates. No. It's already happening. The inflation rate is basically stabilizing, giving the indicator, but as long as the inflation rate is coming down and it is still far away from 2%, the Fed has no reason to pivot unless something in the economy is going to go really, really wrong. And that could be a lot of companies with bad earnings. That could be a lot of credit card and whatever delinquencies, people really getting wrecked by the interest rates in their credits, right? Which is kind of happening right now with mortgages and everything else. And then also the government itself with its insane US 35 trillion and 152 billion debt, and the debt piling on. So that obviously is also something that is about to break in the system, which then is seen by these investors, and where they are saying, okay, it's recession time, sell-off time, and at the same time the Fed is pivoting and cutting rates to move against this recession and print money and stimulus into the economy to move against this recession. So all in all, I think this is a likely scenario based on what we see, but what this person also didn't point out is that there were times here in this phase where also there were rate cuts. You see this here? Here there are rate cuts, and a market had a quick small sell-off and then went on with, so we see this here. Here's rate cut, here's rate cuts, all the way from here, basically rate cuts, and the market goes up. That's basically the simple over 20 years of rate cuts and raises without the market really reacting, only going up, right? So it's not guaranteed that you have this meltdown just because the Fed pivots. In fact, you need something to massively break in the economy, and then the Fed reacts with the pivot. But it also can be that the Fed just pivots and nothing is so bad, you just have a quick flash crash sell-off as we saw it right now. That is a potential scenario. So there is no reason, in my opinion, for the extreme fear in the market. Maybe because of some global conflicts, but definitely not because of Japan raising interest rate or whatever. And I think, for me personally, no matter what happens, if we crash, fine, I can buy more. If we go up from here in that way into a, 20-year long-lasting printed bull market, I'm also fine, right? Bags are packed. I'm going to see where it all ends, but let's see. Let me know in the comments what you think about this. And wherever you are on the world, have a great morning, evening, day, night, or afternoon. And I see you in the next video.